Good day, ladies and gentlemen. Thank you for standing by, and welcome to the Xinyuan Real Estate Company second quarter 2020 earnings conference call. At this time, all participants are in a listen-only mode. Later, we will conduct a question-and-answer session, and instructions will follow at that time. As a reminder, we are recording today's call. If you have any objections, you may disconnect at this time. Now, I'll turn the call over to Julia Chen, Managing Director of the Blue Shirt Group, Asia. Ms. Chen, please proceed.
Hello,
Julia, pardon the interruption. We are having trouble hearing your line.
Me today are Mr. Yong Zhang, Chairman and Chief Executive Officer, Mr. Brian Chen, Chief Financial Officer, and Mr. Hongwu Zhang, Vice President. Mr. Yong Zhang will deliver opening remarks, and Mr. Brian Chen will provide additional details on the company's financial results and outlook. Before we continue, please note that today's discussion will contain forward-looking statements made under Safe Harbor provision of the U.S. Private Securities Litigation Reform Act of 1995. Forward-looking statements involve inherent risks and uncertainties. As such, the company's actual result may be materially different from the expectation expressed today. Further information regarding these and other risks and uncertainties is included in company's public filing with the SEC. The company does not assume any obligations to update any forward-looking statement except as required under applicable law. With that, let me now turn the call over to our Chairman and CEO, Mr. Yong Zhang. Please go ahead, Mr. Zhang.
Thank you, Julia, and hello, everyone. Thank you for joining our second quarter 2020 earnings conference call. Our second quarter results reflected consumer housing consumption, rebound and economic recovery. We are on the path to catch up with the full-year sales guidance. With total contract sales of the first half reaching around $1.18 billion, and total revenue of the second quarter increasing about 126% from the first quarter. Recently, in quarter three, certain major projects such as Qingdao Rongqi and Zhengzhou Xinyuan have successfully launched. So we now holding a more optimistic view towards the full-year sales result. With recovery of sales and cash collection, we managed to further optimize our debt structure and structure and improve liquidity position. Total debt and net debt kept going down, while the cash balance increased at the end of quarter two. Moreover, the percentage of short debt reached record low level since 2017. We also managing to further expand our funding channel Recently, we have issued offshore XIN bond. The property management company also successfully completed its follow-on offering because we are confident in our long-term outlook as well as the near-term recovery. We will keep paying dividends again this quarter. It will be same as the previous quarter. We are proud of our persistence of paying dividends for the past several years. With that, I will now turn the call over to our CFO, Brian Chen, who will offer more details on the financial performance. Brian, please go ahead.
Thank you, Chairman, and good morning, everyone, and thank you all for joining today's call. We hope that all of you and your families are safe and healthy during this tough time. Before I go to the detailed information, we acknowledge that this is a difficult quarter and there are some hard-core numbers in the quarterly revenue release. I do want you to take away at least two key points beyond this number. One, Xinyuan's revenue does have a strong recovery. Although the revenue recognition is a little bit left behind, our contract sales have already double-digit increase compared to the same time last year. Secondly, our cash position and our liquidity has solid improved. Now let me go into the detail. As Mr. Zhang just mentioned, we are on the path to recovery with sales growth year over year. However, the pandemic still caused a significant impact on the construction progress and the revenue recognition in Q2. This caused the top-line decline on a year-over-year basis. In order to catch up, we made good progress in major projects opening in Q3 and expected in Q4. For example, Linshan and Zhengzhou Xinyuan project had pre-sales in July and August, and the Beijing Tongzhou project is expected to launch in September. The construction has already begun, actually. We will continue to accelerate our progress in project opening, construction, and will further improve our sales efforts. We view the top-line decrease only a temporary effect and expect the revenue recognition coming back to a normal level on a full year basis. In this quarter, we have further optimized debt structure. Our total debt was $3 billion as of June 30, 2020. This is a $0.6 billion lower year over year. Short-term debt was $1.2 billion, which is 31% of the total debt. This has been decreased from about 37% compared to the last quarter end. Compared with Q1, we have reduced our short-term debt by about $197 million, and the total debt reduced by $32 million. Moreover, our funding channel has been further broadened and diversified. Recently, we successfully issued offshore RMB notes, or what we call Binsen notes, of total size around 520 million RMB. Our property management sector, which got listed in Hong Kong last year under the code of 1895, also made its follow-on share offering with about 127.2 million Hong Kong dollars of net proceeds. We also have applied a 3 billion RMB onshore bond quota and has been proceeded by Shanghai Stock Exchange. The application of the creative funding vehicles has demonstrated the capability of our capital market operations and provide more flexibility on cash flow management. From a broader view, the industry remains promising. We are seeing very encouraging signs of the residential business in China. Although, according to the National Bureau of Statistics of China, the total real estate investment reached about RMB 6.3 trillion from the first half of the year, and the urbanization rate reached to 60.6% in 2020 and expected to further increase in the year. We are very optimistic about the long-term growth potential of China's real estate industry, and we believe Xinyuan, as one of the leading real estate developers in China, will emerge from this period of crisis with an innovative business model and strong execution capability. Now, let me go through some key financials in this quarter. The contract sales, as mentioned earlier, of the first half of the year was about $1.18 billion, which is about 15% increase compared to the same time last year. Total revenue recognition a little bit high, but still reached about $284 million this quarter over quarter. Increasing 126% from the first quarter this year. Gross profit for the second quarter of 2020 was $19.2 million, or 6.8% of the total revenue. This gross margin, it seems, decreased dramatically from the previous quarter, but this is mainly because we made some prudent adjustments. We considering the current market price affected by the epidemic and reduce the expected selling price or the value of several projects. And this one-time adjustment resulted in a significant reduction of the gross margin of about $35 million. Without this adjustment, gross margin or normalized gross margin for this quarter would be 22.5%. The SG&A expense was $51.4 million compared to $44 million for the first quarter. We strive to managing our costs prudently in order to improve our operating efficiency. Net loss for the second quarter of 2020 was $30.1 million, comparing to a net income of $18.8 million in the same quarter last year. And once again, if we normalize and adjust the one-time adjustment or the gross margin back, we actually break even and even have a few $2 to $3 million profit if we normalize that adjustment. Now, let me discuss the balance sheet. Our cash position and liquidity are solid. At quarter end, we have cash and restricted cash of about $1 billion, comparing to $933 million as at the last quarter end. As Mr. Zhang mentioned, we will again pay dividend this quarter. Moving to our project update, our overall asset position remains strong. Real estate properties under development was $3 billion, and real estate property development complete was $415 million. Total sellable GFA was approximately 4.3 million square meters, which would translate into around 60 billion Chinese yuan sellable value. Most of our projects are located in the Tier 1 and Tier 2 cities. In our market, our projects are pre-sale. So we expect to generate meaningful cash flow from these quality projects. We remain confident in the outlook. At this point, we still expect contract sales of the 20 to 22 billion RMB this year. Notably, as Mr. Zhang mentioned, our Hong Kong leased property management company continues to perform very well. In July, it completed its follow-on offering and sold an aggregate of 50 million new shares of its common stock. The successful capital raise has provided us with additional resource and capital to pursue our future goals. In the second half of 2020, we will continue to focus on improving our operating efficiencies, optimizing our debt structure, and further improving the liquidity level of the company. Meanwhile, we will further strengthen our capital operations and explore more opportunities in the capital market in order to generate greater value for our shareholders and bond investors. With that, let's open the call for questions. Operator, please go ahead.
Thank you. And if you would like to ask a question, please signal by pressing star 1 on your telephone keypad. If you are using a speakerphone, please make sure your mute function is turned off to allow your signal to reach our equipment. Please limit yourself to 3 questions at one time, but you may rejoin the queue if you have additional questions. Again, everyone, please press star 1 if you would like to ask a question. We'll pause for just a moment to allow everyone an opportunity to signal for questions. And once again, ladies and gentlemen, to ask a question, please press star 1 if you would like to ask a question. All right, and we will take our first question from Alex Mack, a private investor.
Hello. My name is Alex Mack. Can you hear me?
Yes, Alex, we can hear you loud, clearly.
Okay, good. Because I was late at the conference call, I just joined about 5 minutes ago. I missed the beginning. I've been a long-term investor for about 10 years for the company, and I participated in the conference call in your Q4 of last fiscal year, about 6 months ago. And I don't know whether you recall at that time, I was the one who asked for a reduction in the company dividend so that you have enough money to buy back more shares. So anyway, you did reduce the dividend in the last quarter, Q1. But as you know, the share price still remains so low and hasn't gone up at all. Obviously, it is a disappointment for me, and I'm sure for a lot of investors as well. Especially when you look at the company's financial statistics. The company's value, the book value is about more than $10. I believe it's about $12 per shares, but yet it's trading at on $2. And as an investor, I mean, as a developer like your focus is on the operation to make sure that the development is going on smoothly and making money. But as an investor, we are mostly focused on making sure that we are getting a proper return for our money invested in the company. So anyway, just go quickly and do it. I don't want to take too much of your time because your company has invested for more than 10 years now in the New York Stock Exchange. And in fact, the IPO of the company was probably more than $10, and today it's sitting at about $2. So it does look to me that there's either a lack of interest or the U.S. investors have no appreciations of the valuation of your company. So in light of, for various reasons, maybe because the company is too small, real estate development is so far away in China, they cannot really see it, feel it, or maybe they have concern about corporate governance, and plus lately, of course, the U.S.-China trade tensions, of fear of the company being delisted from the U.S. So my question now is, have you thought of maybe also do a dual listing of your real estate development in Hong Kong Stock Exchange, just like what you have done for your real estate development companies? Because over in Asia, as you have seen, your real estate management company has performed quite well in the market, showing that the investors in the Asia can give more due recognition of the valuation of the company compared to the U.S. And based on recent example also, not just your real estate company, but companies like Alibaba, JD.com, they also have recently added their company listing to the Hong Kong Stock Exchange. And the stock prices has performed very well ever since then. So, as an investor, myself, I'm pretty miserable to see the stock price remain $2 because obviously something should be done.
Pardon the interruption, caller. If you would please ask a question to the speakers.
Okay. So my question is two. Number one, would you consider adding the listing of your company to the Hong Kong Stock Exchange? And number two, how much of a stock buyback has been done in the last quarter? Thank you so much.
Okay, thank you, Alice. Appreciate all these input. So, quick answer. First of all, I also want to acknowledge that with the we don't think the current share price reflect the company's true value. The dollar amount per ADS you mentioned earlier kind of fall in par as our internal calculation. And don't even mention that just for the property management company got leased in Hong Kong alone already had the market value for our share, which is 55%, already able to turn into about $140 million, while our total company only at about 105 or 106. So I agree with you, there's a lot needs to be done. So coming back to your question, the first question is that whether we are considering coming back or dual list in Hong Kong Stock Exchange. We are currently explore all kinds of alternatives. This is one of them. We will provide an update and anytime when we come to that certain points and when it is in compliance with the regulatory requirement, we will share this progress with our shareholder. Yes, but this is actually one of the alternatives that we are exploring for the moment. But to increase the value, we are not saying that we give up the U.S. shareholder and the market. We will continue to improve. For one thing, our communication with the outstanding shareholders, but also we are going to reach out to the other institute and bigger investors to make better communication and tell a better story and tell who we are and what is the true value of this company to the New York or U.S. shareholder to improve the liquidity and confidence on the company. So there's a lot need to be done. On your second question about the share buyback, we had sufficient quota or room got approved from the board directors. We are actually looking at the opportunity in this area. For the last quarter, for various reasons, we actually didn't buy back a lot or significant amount. When we come to this point, we will look at this area more actively and looking for opportunity when time's right for the share buyback. With that, I hope I answer your question.
Hello. Thank you. Yeah, I'm glad you are exploring the listing options in Hong Kong as well, because all I can say is that I'm a Chinese myself. Your company, the U.S. investors, especially the institutions, have no interest in a small company and a company is so far away in China because they cannot see it. And they also are being attracted to other companies like high-tech technologies companies. Your company is a real estate company. So I would urge you to take a serious considerations to do the same thing as what you've done for your property management operations. Because it's been 10 years in the U.S. exchange. Why would you want to continue on with not doing anything about it? If I sell a product in New York and nobody wants to buy it, obviously I'll take my product to somewhere else to sell, right? Common sense.
And pardon the interruption, Alex. We do need to move on to our Q&A session.
Okay.
Thank you very much. And next, we will take a question from Stephen Ralston with Zacks.
Hello. Thank you for taking my question. Could you help me understand the impact of COVID-19 on Xinyuan? And could you narrow your scope of the question to the primary area where you're developing in Zhangzhou? It seems that's where 40 to 50% of your construction projects are and have been. And so I think you probably have a better feel of what's happening there, and it would be less impacted by other regionalities. What is the impetus for the slowdown in sales? Is it because potential customers are delaying their purchasing decisions, or is it because of the delay in the completion of the projects, or is there some sort of impact to the disposable income of the potential buyers? Could you just help me understand that?
Sure. Thank you, Steve, for your call. First of all, the impact of the COVID-19 it really coming from all of those areas that you were talking about earlier. So let me start one by one. First of all, when did COVID-19 happen? In pretty much all months in the Q1, and the business are not really coming back until the second half or until the very end of the Q2. A few things happened. First thing is that the sales office was closed for months. So our customer and potential customer, they are pretty much stay home without able to go into the sales office and understand the property, let alone to finish those procurement activity and mortgage activity with the banker. So that's one. Second is because of all the construction activity was forced to cease. The subcontractor cannot start the work. You know, in China, without the construction coming to certain point, you are not allowed to, or you won't be able to apply for the permit to do the pre-sales. So legally, you are not allowed to sell. Last but not least, because when people just walk out of the lockout, they still not sure whether we fully walk out of this. People still nervous about the big ticket item acquisition. So overall, although we see the sales recover and happen, but this is really happen at the very end of the Q2, middle or the end of the Q2. Although we recognize a lot of sales, contract sales, but the revenue recognition normally has some time lag behind, which caused the revenue recognition and the gross margin and the profit on the books that looks bad. But the good thing is that with the big sales got secured and with the activity coming back, with the pending demand going to release in the next few months and quarters, we have the confidence that the company as well as our peers can walk out of this epidemic and achieve the annual goal by picking up what we lost for the first half of the year in the second half.
Thank you. Let me just try to rephrase that and see if I understand it correctly. Now, recessions really don't happen in China that often. You've been on a good growth path for years. But it seems like you're saying there's a pent-up demand, and it's not like a recession. It's just that the sales have been delayed, and you expect this pent-up demand to return once the restrictions of COVID-19 are reduced, and that then you expect to come back to your growth path.
Yes, that's what we are talking about. With the urbanization and with the and middle class growth, as well as because Xinyuan focus on targeting our market in the tier 1 and tier 2 cities in China, typically we are not that worried about the demand. The demand is always there. What we are worried about is that you don't have sufficient properties that come to that critical point, then you can attain a pre-sales permit. Normally, when we attain the pre-sales permit, we can achieve the sales goal within the time period. So with all the land at hand and with the resource and with our partner ready to make sure that we have sufficient inventory to sell to our high demand property, sell to our target customer, we believe that whatever loss in the first half of the year, the demand is always there. It's just a timing that those sales got postponed to the second half of the year on top of what is the reasonable normal demand there naturally in the second half.
Thank you very much.
And next, we'll take a question from Sean Shaw, a private investor.
Hello, can you hear me? Hello?
Yeah, Sean, thank you.
Hey, Brian. Yeah.
Go ahead, Sean.
First of all, I want to begin. Yeah, okay. So first of all, I want to begin by thanking your chairman and board members, and as well as all the employees of Xinyuan for the hard work during this pandemic. So I have three questions. My first question is, I saw Xinyuan file to issue 3 billion Chinese yuan bond in Shanghai Stock Exchange, about $450 million US dollar equivalent. The bond got a credit rating of AA. So what would be the expected interest rate on those bonds? And is Xinyuan going to use more domestic financing going forward?
Thank you, Sean. For the first question, typically I would say that the rate will be around 8%, depending on the depends on the investor and depending on the specific timing. But I would say that around 8% would be a reasonable range. Talking about the whether we will have more financing from domestic, I would like to emphasize that first of all, the company it is on the path that we would like to leverage it. We want to control the overall debt. So we would like to look into more opportunity to unlock the underlying value for the land or land bank that we already have. Don't forget that for the last few years, we raised a lot of debt, and in exchange, we had a lot of high-quality land bank at hand. So for the next 12 to 18 months, I would say that we are more focused on the operating activity to have more positive cash flow from the operating. As a matter of fact, for the last 3 to 4 quarters, we already achieved very positive cash flow from operating. We will continue this path. In terms of the financing, we don't really have a strong preference whether it's overseas or domestic. We'll look at the specific timing. We look at the potential lender. We'll look at the opportunity and decide which deal is fit in the best interest and provide the best benefit to the company. We'll look at these two markets, onshore and offshore, at the same time.
Okay, great. My second question is, it's more about your individual projects. So previously, I recall you mentioned in one of the investors' conference call that some projects got delayed, some project in the north got delayed, especially Qingdao project and Beijing project, and those two has very high average selling price, and was delayed for a long time. So what's the you said the Qingdao project is already opened and it's selling well, right? And so what's the current status of your Beijing project, and how is the Beijing and Qingdao project gonna affect your yearly guidance? And is the company on track to meet your sales goal this year?
Yes, thank you for that. Beijing and Qingdao are one of the few key projects or major projects that we are on the right track to launch and realize the value from. For Beijing, just give you some context. Our average price, sales price per square foot for our property is around 13,000 Chinese yuan per square meter. For Beijing project, the sales price is expected at about 60,000 Chinese yuan per square meter. So you can imagine it's quite profitable, and it can bring in sizable cash proceeds for the second half of the year. For that project, we already started construction in earlier this month, and we expect to achieve the permit for the pre-sales next month, middle or the late of the September, i.e. Probably not all the project going to be launched, but at least a portion of it will be go by phase. For the Qingdao project, we already started the pre-sales for the first batch in July. Sales outcome are pretty good, and the sales price average about the 20,000 per square meter. And some of the sections, some of the villa are even higher, go as high as 30,000 RMB per square meter. So yes, these two projects is on the right track. will bring in sizable cash proceeds and high profit margin to the company.
Oh, that's great. Mm-hmm. So the company, as of now, is still relatively confident that if project goes well, that you should meet your sales target in your guidance this year. Am I understanding this correctly?
Yes, that's correct. With this sizable land bank and about 22 billion RMB worth of the land bank that are available for sale for the second half of the year. And as mentioned in the release, first half of the year we already achieved about 8.3 billion. To make the 20 to 22 billion RMB target, we think we are pretty confident that we can achieve this goal from the contract sales point of view.
Yeah, that's great. I look forward to it. My third question is actually about your book value. So Xinyuan holds a lot of assets, mainly, as you said, a land bank, properties, and also your project under development. And obviously, as well as your subsidiaries, one of them is your Hong Kong listing property management. So obviously, Xinyuan record all your land and properties and assets on your book based on historic prices or the cost when Xinyuan acquired them. So in the last few years, the real estate market in China is generally, both the land price and home price are on the rise. So based on the market condition, is it fair to say that the fair market value of Xinyuan's assets should be higher than what's showing on your book based on the accounting principles? Based on my guess is maybe after the home price increase after a few years, my guess is Xinyuan's assets should be worth higher than book value. Do you think that's the right assessment?
In principle, yes, it is. And you know that Xinyuan is one of the very few Chinese real estate developer that reporting under U.S. GAAP. So our inventory and the property held for lease, they are all reporting on the book value, which is based on the historical cost basics. You look at our balance sheet, we have like 3.6 billion US dollar worth of the construction in building construction and the building available for sale. They are all stay at the book value. If you use the fair market value to look at it, easily you can add another 25 to 30% more value of those book value. Another thing is that we also have some sizable properties that we have for lease, some plaza, some commercial property, or other peer developer company. They would actually already fair value them and share it again in their financial statement. Xinyuan is the only one that never doing that. If you do the fair value on those property held for lease, easily you can see 2 to 3 billion RMB more fair value just for the plaza and the commercial property held for lease alone. So yes, you are right in principle.
Yeah. When you say commercial property, you mean office building, shopping mall, or parking lot, or all of them? Or
more like shopping mall, more like plaza and shopping mall.
Shopping mall, okay. Okay, shopping mall. Are they mainly located in Zhengzhou, or just where Xinyuan's past projects located, like Chengdu, Beijing, Zhengzhou, Xi'an, and? As
you mentioned, like mainly in Zhengzhou, Chengdu, Xi'an, in this area. You know, in China, in a lot of big communities, you typically need to build a small to medium to large size of the commercial plaza to be to provide more value, add value to the residential. Yes, correct.
Yeah. Then after you sell the commercial ones and you hold, after you sell the residential ones, you hold the commercial ones, right? As well as the parking lot and stuff.
That's correct.
Right?
Yeah.
Mm-hmm.
Yeah.
Okay, understand. Yeah, that's my question. And also, I want to appreciate all the employees for their hard work during this pandemic, and I look forward to the future quarters. Mm-hmm. Thank you, Brian.
Thank you, Zhang.
And up next, we'll take a question from George Gould, a private investor.
Hi, Brian. I'm very surprised to see you have such large increase in contract sales. Can you break down the quarter two, how much is sales and what's the average price increase or decrease from last year?
So give me a sec. Let me pull out the detail here. But I can give you some high level. High level. For the contract sales recognized in the first half quarter, most of them is coming from the Henan, Chengdu, and the Shandong and Guangdong area. The average selling price for these new contract sales is at about 13,000 RMB per square meter.
Okay. But it's a large amount. What is the total contract sales on quarter two? Because you didn't break up between quarter one and quarter two.
In the overall, we had about 8.3 billion contract sales for the first half of the year. First quarter is about 1 billion and 6 to 7 billion happened in the second. Although majority of them happened in the last, I would say the last 1 week or two of the quarter.
Okay. Thanks. So that your prediction about the yearly quarter profit will be similar to last year. So do you expect a lot of sales increase or the construction, more construction in the second half?
Yes, George. We at this point we still maintain the outlook that we can achieve between 60 to 80 million US dollar profit, kind of in line with what we had last year. Acknowledgedly, this is a very challenging goal, although not totally impossible. The company lined up, the management team pretty much working 24 hours trying to achieve this goal for the last two quarters. As you see that in the last month of the Q2, we had a sizable contract sales, and we are going to increase the investment and funding in a lot of key construction, make sure that more and more of these projects can meet the pre-sales threshold and available to deliver to the sales to the customer. At the same time, as mentioned earlier, that we had a few key projects like Beijing, like Qingdao, like in Henan, like in Xi'an and Chengdu. We have broken down the sales target month by month, week by week, and have specific people and teams on top of those targets. This is a really huge, challenging, aggressive goal. We acknowledge that, but the company, overall, the whole company is trying and commit to still try to make this happen. That being said, I have to put in a caveat that this is a challenging environment. The company still needs to strike the balance between the liquidity and profitability, which means that we have more proceeds coming back from operating activity to meet and improve our liquidity. Sometimes we have to make tactical decisions to adjust the profitability. So we'll see as we go further along this path whether the net profit can still be met. At this point, we had a goal. We had an inner goal that we want to try to make it happen.
Okay, thank you. That's very good. Last question for me is that you mentioned something about new funding for stock purchase from board of directors. I didn't catch it. Can you repeat that again? Are you running low on the repurchase fund? Are you getting more funds?
No, at the beginning of the year, we get a big bucket, a blanket approval from the board of directors that authorized the management team to do the share buyback when it's appropriate, when it's at the best timing. The management team are actively looking at the market condition every day, and we also need to strike a balance between our bond investor and the share investor. So we have it at the management team's discretion. When its timing is right, we can do it anytime we think is right.
Okay. Thank you. Thank you very much.
Thank you. And we are at the top of the hour for this call. If you have more questions, please reach out to the company directly by email. Let me turn the call back to Brian for closing remarks.
董事长要不要做一些 closing 的这个后面对我们的投资者和股东？
没有了。
Okay, thank you, operator, and thank you all for participating on today's call, and thank you for all your support. We appreciate your interest and look forward to reporting to you again next quarter on our program. Operator, now I turn it back to you.
Thank you. And ladies and gentlemen, that does conclude today's call. We thank you for your participation, and you may now disconnect.